is business funding is great. It's become a really popular topic. But the first question we have to ask ourselves is, why business funding, right? And ultimately, this is the way that we teach. Smart founders don't wait until they need the money, because a lot of times, by the time you need it, it becomes a timely situation, or sometimes there are missed opportunities, right? I've worked with a lot of business owners. I've seen these scenarios over and over and over again. So the smart founders actually position themselves to access capital before they need it. So that way, when they do need it, they can take action quick, and they can do it in a much, much smoother process, right? So now that that's the first thing, how can we actually use this? What do we actually use business funding for? Everything I'm going to teach you to leverage funding for is for growth, with the intention to grow your business, right? So to grow faster, you're going to need things like marketing. You're going to need to upgrade things like systems and bringing on hiring staff in order to help you grow your business, because as your business grows, the demand is higher. You need to have better systems. You need to have better staff. And obviously, you want more exposure to your business, right? So growing faster is one. One of my main, the next one to the right, one of the ones that I love the most is acquiring assets, right? So you might be acquiring real estate, you might be upgrading equipment, or you might even be doing an acquisition of buying another business, right? These are all different ways that you can leverage funding in order to acquire assets. The other thing is investing in yourself. We hear it all the time. Your network is your net worth. You are in this community. I know that you have gotten so much valuable information here. And this is another way that we can actually leverage funding, is for access, right? So investing into yourself for things like education, for things like masterminds, for things like mentorships, so that you can get access to skills, access to resources, and access to information, right? And then the other thing is protecting your cash. I'm a big fan of using other people's money, right? Leveraging other people's money in order to grow what I am looking to grow, right? So the ultimate thing is protecting my cash, protecting your cash, and being able to scale without draining your savings, or without maxing out personal credit cards, which is a lot of times the mistakes that I see business owners make, right? And the key word here that we're going to talk about is leverage, because leverage is what you're going to use in order to go to the next level, right? Now, whenever you're applying for business funding, I want you to understand that nothing about this is random. Everything has to be intentional. Everything has to be specific, right? So the problem is that most business owners have a great idea, right? Most businesses have a lot of potential. However, it's important to understand that when you're looking for lending and when you're looking for funding, lenders, banks, and investors do not lend on potential, right? They lend on structure, they lend on paperwork, and they lend on what is called predictability, which is what we are going to break down as we actually go through this process. So the biggest problem here is that most businesses don't get denied because they didn't have potential, because they didn't have great ideas. They get denied simply because they don't understand the game that they're playing, right? They don't understand how the banks think, how lenders think, and how lenders actually evaluate risk, right? So there's a couple things that a couple other business owners do, and I want you to identify the problem first so that we can solve that actually going through this process, right? So the number one problem people make is that they apply randomly without a strategy, right? They might have gone on YouTube, they might have been driving down the street, they might have seen something on social media, they took that basic information or just without information and just took action, but they didn't understand what they were actually doing. Remember, nothing about this is random. Everything is about strategy. And throughout this process, I would never tell you anything that you don't have to do. If I say it, that means it's absolutely applicable to your situation, right? The other thing is that a lot of times people don't necessarily get denied because they're not qualified. They get denied because it's not able to verify their identity. So the second problem here is their personal information does not match across records. If you are not aware of this, the modern day banking system is computers, right? So when you understand this, you have to understand which systems these computers and these lenders and these banks actually receive your information. And when you understand that, you're going to know how to position your information so that you can be easily verified. Because the number one thing that banks are always fighting is fraud. And the biggest thing that they have to always connect to that is to being able to verify that the applicant or the business is verifiable. So if the information that you have doesn't match across the reporting agencies, then that is a high risk to the lenders, and therefore they get denied, right? The next thing is they have no real business presence. They have no real business structure. So a lot of people go to set up an LLC and they set up a corporation or they set up these trusts and they automatically think that, hey, I've got something set up. I can go and get all the funding that I want to. But just because you have an entity established and set up does not mean that it was structured properly, right? And so it's important that when you have these things, it's not just established on paper, but it's actually structured properly in order to be verified as a real business, right? The next thing is they don't know which banks to approach and when. There are over 4,000 banks in the United States alone. The majority of people can name less than 5, right? And so the reason I say that is because every bank operates differently. The way one bank operates is not the way that another bank operates. The way one lender evaluates a profile or lending opportunity is not the way that another bank does. And so it's important to understand this because based on your specific situation, the strategy changes, right? And then the other thing is that they burn inquiries and get denied over and over and over again. And something that we're going to go over throughout this process is that all of the work, I used to say most of the work, but now I'm going to tell you all of the work is done prior to you ever submitting an application for funding. So most people think that funding is just submitting an application, right? However, if that was just the case, then everyone out here would have millions and millions of dollars, right? And there would be no need for anyone like me or any of this information that I have. But the reality is that it's not like that, right? And so before you ever submit the application for funding, you have to make sure that you have all of the information and everything aligned at the highest probability in order to submit that application, right? Very, very, very important. So the solution, I just gave you the problem, but now what's the solution? And so the first thing we have to understand here is that we have to change our thinking, because to position ourselves for the lenders, we can't think from what we assume. We have to think from understanding how they evaluate risk, right? So the solution here is I'm going to teach you how to start thinking like a bank, just like I touched on the previous slide. Banks only fund on predictability. They do not fund on potential, right? So when your file looks organized, when your history is clean, when your business is structured properly, then funding becomes a much higher probability, and it almost becomes an expected or a predictable outcome. Not a guaranteed outcome, but a predictable outcome, right? So what does this actually mean? Clean history. We're going to break them down one by one. So clean history. Clean history has to have on-time payments, right? So on-time payments, low card balances show that someone is financially stable. When you are looking for access to capital, and I want to clarify something here, if you're dealing with some of the issues that we're going to go over, it's perfectly fine, right? Because you may not have had this information previously. So if you're having some challenges, some of the things that we'll go over, it's fine. We're going to give you some steps in order to fix that, but you just have to be aware of the problem before you can actually ever solve the problem, right? So clean history, you need a good reputation on paper that shows you are a reliable applicant and that the bank or the lender knows that they are in a high probability in order to get paid back, right? So clean history. Consistent information. This is what I talked about a second ago. Identity verification and mismatch is the number one reason people get denied. It's not necessarily because they didn't have great credit. It's not because they didn't have a great business. It's simply because the systems and the computers could not verify who they are, right? So the consistent information, how do you fix that? Is you want to make sure your name and address match everywhere the banks look. And we're going to go over all of the different places, or a lot of the different places banks look. And it's important that you go there and you start making sure that your information aligns, right? The next thing is a real business. You have to have a professional business, right? When you are looking for business funding, you absolutely have to have a real business. You have to have the proper registrations, and you have to have a real presence. Now, we're going to talk about this a little bit more later, but this is a trust class, so I just want to preface it here. What I teach is I teach you how to keep the trust private and how to establish public entities like LLCs or corporations and position those public entities in order to get access to capital, and then use that capital in the best interest of the business and of the trust, right? We're going to go over this a little bit later, but I just wanted to preface it here. So that way, whenever we get into it later, it will make a lot more sense. And the next thing is you have to have a smart strategy. Again, you have to apply to the right banks in the right order at the right time. All of these components together is how you create what is called a successful funding plan, or a successful funding sequence, right? Now, the rest of this presentation is going to be teaching you how do you position yourself for a qualified applicant, right? So let's break down two scenarios. Let's say two borrowers walk into the bank. Borrower number one, they've got recent late payments. Their cards are almost maxed out. Their addresses don't match. When they're asked for what they're going to use the funding for, they have no real clear use of funds. They have no idea. They just want to see what they can get, or they just heard funding was a good idea. And when they're asked for their documents and their information to verify who they are and their business, it's all scattered. It's unorganized. It's all over the place. The result of this file is that it looks uncertain. Now let's look on the flip side. Borrower number two, they walk in the bank. They've got a clean payment history. They've got low card balances. Their name and the addresses match. They've got a growth focused plan. So again, when we back up to business funding and why business funding, they know they're going to invest in the systems. They know they're going to invest in the marketing. They know that they are doing something progressive with the capital that they are applying for. Why? Because they have a growth focused plan and they know what they're going to do with it. And when they're asked for their documents to verify them and their business, they're organized. The result here is that it looks predictable. And this is how borrowing works in the most simplest way, is that banks prioritize the file that actually looks predictable. And it comes down to making sure that the organization of your information is actually accurate, right? So now let's break on to this. So now, how do you actually position yourself? And again, if you're not in the most ideal position from some of the information that I'm going to give you today, it is okay, right? I promise you, it is okay. It's just important that you get this information so now you can actually work to position yourself at the time is right for you, right? So how do you position yourself? And ultimately what they look at is a full picture, not just your credit score, right? So let me explain here. Anytime it comes to any kind of funding, credit will be considered, whether it's personal credit, whether it's business credit, right? Now, the problem here is that everyone gets so stuck on the credit score, right? And I'm going to tell you today, as much as people love the credit score, it is not the determinant that determines whether you get funded or not. What actually determines whether you get funded or not is your credit profile. So what this means is that when you have a credit score, that is a score based on a scoring algorithm, right? The algorithm and that score is generated by the information that's actually on your profile, right? So let's break this down. Number one, payment history. Payment history is just a record of the credit accounts that you've been able to manage, whether it's a credit card, whether it's a mortgage, whether it's an auto loan, etc., right? And so when you have these accounts, it's important that you pay every bill on time and that you don't get late payments, right? This is the ideal scenario, because Again, when banks look at the paper, they want to say, hey, or lenders look at the paper, they want to look at it and say, hey, this is a person who is financially stable because they have been able to manage what they already have. So because they've been able to manage what they already have, now we feel more safe or more secure in lending to this applicant or this business, right? So it's very important that you have a good payment history. Card balances, something we're going to talk about a lot, and there's certain data points that come along with this, is card balances. So when you have a credit card, and let's say you have $1,000 credit card, just for simple math, there are often times that I have conversations where people are like, hey, I have $1,000 credit card, and they've got the whole $1,000 credit card maxed out, right? Because in their belief, they say, hey, I have $1,000 credit card, I'm supposed to spend $1,000, right? And what the data point here is that yes, they do have the option or the ability to use that whole credit card. However, the more of a credit card you use, the more reliant on that credit card the banks or the lenders assume. So what we want to do, because we have to understand something here, banks and lenders are in the business of lending money. I want to say that again. Banks and lenders are in the business of lending money. Very important, because a lot of people think that banks and lenders and investors are against them and they don't want to lend them money. They do. They're in the business of lending money, right? However, a key component to understand here is that they want to lend money to applicants that look secure or to applicants that look like they don't need the money. This goes back to my initial process. This is why smart founders and business owners position themselves before they need the money, so that by the time they need the money, they can execute on it quickly, right? So a key data point here is, hey, how do I let the bank know that I don't need their money? One of the key components here is whatever credit card balances you have, you want to keep them below 30%. So as an example, if I have $1,000 credit card and I'm telling you to keep it below 30%, yes, you could use that whole $1,000 credit card. However, to signify to the bank that you don't need as much of that money, is you want to use $300 or less. Key data points we look for is between 10 and 20% as ideal. You never really want to go over 30% utilization whenever you're looking for this type of funding, right? Number 3, matching information. Where does this information report, right? So what we're going to talk about is, because we're going to start at the foundation and we're going to build our way all the way up to the end for how you get business funding, right? So to understand this, the very first thing is, when you are looking for access to capital, the first thing they have to verify is you as a person. How do they verify this? There are 3 major credit reporting agencies that we are going to discuss. It is going to be TransUnion, it is going to be Experian, and it is going to be Equifax. Again, the 3 major credit reporting agencies we are going to discuss today is TransUnion, Experian, and Equifax. Now, when you have this information, it is important to understand these are individually privately owned companies. The credit reporting agencies, TransUnion, Experian, and Equifax, are independently privately owned companies. The reason I'm saying that is, for one, they're a for-profit company, right? They're not government affiliated. That's the first thing. Number 2 is that because they're independently privately owned companies, just because one of the 3 reports the information does not mean that all of the others are going to report the same exact information. That is a common misunderstanding and mistake that I see people make, is they say, hey, I looked at my TransUnion and my TransUnion information has this. And they assume that the information Experian and Equifax is the exact same. And a large majority of time when you look at it, they're going to differentiate, right? So I want you to understand that the name and address has to match everywhere, at the bank, on the credit reports, and on your IDs. These are how you position yourself for access to capital. I've worked with applicants before who are applying for capital, and they bring in an ID, and their ID is a completely different state than all of the information that they gave us, right? Denied. every time. Doesn't mean they didn't have potential. Doesn't mean they didn't have great credit. It just means that they didn't do the basics of being able to verify their identity, right? So moving on to number 4 is account age. Lenders want to see history. Just like with payment history, the longer history someone has, the more age and more experience they have, they're going to look like a more reliable applicant, right? So for example, when you are applying for capital, you want to have older accounts because the person who has experience with credit cards and auto loans and mortgages for a couple years is going to be a more prioritized applicant than someone who has just had a mortgage or a credit card or a car for 6 months or a year, right? Because lenders want to see consistency over a period of time. So it's important to know that account age is important. And when you're looking for access to capital, you don't want to apply for a bunch of accounts. You want to do this strategically, not randomly, right? Number 5, inquiries. This is another one of the top reasons that even people with great profiles and great credit scores still get denied, right? And it's because a lot of people are looking at the credit score. So let's break down inquiries. So inquiries is just a record of someone looking at your credit in consideration to extend you financing. Most people just look at the credit score, and on average, this is not an absolute, but on average, depending on the weight of your profile, on average, each inquiry is only going to drop your credit score about 3 to 7 points. Now, most people look at that because the lowest possible credit score is a 300. The highest possible is an 850. So most people look at this and they say, oh, I'm just going to lose 3 to 7 points. It's not that big a deal. I'm just going to submit. What they don't understand is that even though inquiries don't hurt your score a lot, remember, it's a record of how often someone's looking to extend you financing. So if you have more than 2 or 3 inquiries within the last 6 months, lenders are going to look at it and say, hey, they've got a great credit profile. They've got a great credit score. However, they look like they need money. Going back to my initial process, banks love to lend businesses and applicants money when they look like they don't need it. When you have a bunch of inquiries, the bank says, hey, they're doing a lot of applications. Something is going on, and I need to understand why they are looking for so much access to capital. And so a lot of times, if you have too many applications in a short time and you don't know how to manage those, it looks desperate. It's important as we go through this to be very, very, very strategic, right? And number 6, stay organized. We hear it all the time. Stay ready so you don't have to get ready, right? What does this mean? All of your personal identification information, have it organized. All of your business documents, have it organized. I know Christina's taught you all about trust documents, right? Businesses work the same exact way. You're going to organize this because now when you go look for financing or you're speaking to a lender and they're asking you for your information, you're going to pull out a nice clean folder and you're going to have exactly what they look for. This makes you look like you've been here before. This makes it look like you're used to these conversations as compared to if they ask you for your information and you're, hey, what is this called? What is that? And you're pulling out a million papers all over the place. It looks like you haven't been there before, right? So it's important that you stay organized and you stay ready so that you don't have to get ready, right? Now, setting up your business the right way. Now we're going to touch base on this a little bit further. I gave a little bit of preface just a couple moments ago, and then we're going to set this up a little clearer. So Christina and 7 Ways, they teach about private trust, right? So my intention when I have my trust is to keep my trust private and protected, right? So what I do and what I teach is to leverage public entities like LLCs, like corporations, so that you can operate in the best interest of you and the trust and the needs that are needed, right? So in order to do this, you have to make sure, because a lot of people go to somewhere and they set up an LLC or they set up a corporation and they say, hey, I've got this business set up. I need millions of dollars, right? It does not work that way, right? So what you have to understand is just because you set up an LLC, just because you set up a corporation does not mean that it was set up properly, right? And so it's important to understand how to structure it, because the reality comes down to this. When the banks and lenders see when they see a real business, they send real money, right? When everything is verified, when everything is structured, when everything is organized, this is how you position yourself for access to capital, right? So the very first thing that I teach you is to register the business, right? If you have an LLC or a corporation already, awesome. If you don't, this is fine. But to get business funding, you have to have a legally structured entity, right? So you want to have an LLC or a corporation set up with something that is called the Secretary of State. If you're not aware, every state has a Secretary of State. This is the website that you would go to in order to set up your LLC or your corporation. You can do it yourself, or there are all kinds of third parties that can do it for you, right? The one that we typically use for us and all of our clients is a website called Zen Business. That's ZEN business.com. The reason we like them is because they will set up your company just at state fees, and it's not a requirement to do any of their other upsells. They will try to offer you some other things and some upsells, but you are not required to do them. You can say no to all of them, and they will set up your LLC or your corporation at whatever state cost it is. Every state has a different fee in order to set up an LLC or a corporation, right? So the very first thing is you're going to get your entity set up, and then you're going to go to the IRS and you're going to get an EIN number. I know Christina has showed you how to get an EIN for the trust. Very, very similar process. It is free. It takes about 5 minutes. If you need any assistance, there are a lot of videos on YouTube that will show you how to go and get your EIN set up from the IRS, right? The next thing from there is what you're going to do is you want a business address. Now, a real business address, not a PO box. A PO box does not look legitimate, right? It looks potentially fraudulent. So what you want to do is, what I teach you to do is whatever state or city that your business is set up in, what I tell you to do is go and type in your city and state and type in executive office. So I'm in Orlando, Florida. So I would go to Google and I would type in Orlando, Florida, executive office. What this brings up is some offices local to your area that give you a professional address. So people say to me all the time, hey, Dorsey, I would love to go get a business address, but I don't know where to get one. I don't want to go open up a building. And I'm like, hey, it's okay. You don't have to do that. You can type in your city. You can type in your state. You can type in a executive office, and you're going to have all kind of different options show up that are going to be a professional presentation for your business, right? And then when you do that, you're going to use that address to verify your business, right? Your business and your personal is separate. This is what I teach you. Now, with me saying that, since COVID, it has been more acceptable to have a home-based business. However, a professional business with an executive suite is going to look a lot more professional than your home-based business, right? So I'm going to teach you to always set up everything correctly. Now, let's go over to professional email, and then we'll go to business phone. So if you'll look up at the top right at the professional email, when you have your business name, you want to get what's called a domain, which is just a fancy word for your website and your website domain address, so that you can have a professional email. Now, let's just say, for example, your business is called ABC Consulting. You want to go get abcconsulting.com. How do we get that? We either go to a website called Google Domains, or you can go to a website called GoDaddy. There are a lot of others out there. Those are just typically the two platforms that we use to purchase domains. Now, you want to purchase the website that is affiliated with your business. So if you have ABC Consulting, you want to go get abcconsulting.com, because it's going to look a lot more professional if your name is Bob, to have it at bob@abcconsulting.com instead of a generic Gmail or Yahoo account. Why? Because it looks a lot more professional. Anyone, when they first have a thought, they're going to go set up an email at gmail or yahoo.com. The professional and smart business is going to make everything look clean and professional from the very beginning, right? The next thing there is you want to get a business phone number, and you want to have that dedicated under the business name. The website we use, there are lots out there. There's a lot. There's Ring Central. There's all different kinds, right? You can Google business phone sites, and there's going to be a ton. The ones that we use is a website called Call 8. That is K-A-L-L, call, and then the number 8, right? You can get a business phone number on there, and you don't have to pay hundreds of dollars a month. You can pay a couple dollars a month. You can have a designated phone number, and you can have a professional business phone that can be solidified and verified with your business, right? When you have that information, then you're going to open up a business bank account. It is very important that you open up a business bank account. I cannot tell you the number of conversations I've had over the years where somebody's been running a business and they say they've been funneling and putting all of the money in their personal account and they didn't think it was a big deal. That is a massive deal, and that is a massive issue. When you are looking for business funding, you have to separate yourself personally and business-wise, right? You have a business account for business transactions. You have a personal account for personal transactions. Very, very important. The next thing here is when you open up a business checking account, you must make a deposit. Now, you don't have to deposit thousands and thousands of thousands of dollars. The more money you initially open the account with, the better, right? However, every bank is a little different. Some banks have minimals. Some of them do not. But generally speaking, I would tell you at minimal, unless the bank has a minimal that you're going with, I would tell you at minimal, put $100 in the account in order to activate it. If you can put a couple $1,000s in there, great. The more money you can put in there, the better. It will make your business look more professional and more secure, but at minimal, put $100 in there to activate the account, right? And then the next thing is you want some kind of online presence. A simple website will go a long way. You don't have to spend thousands and thousands of dollars on a website. There's AI out here that you can make a website in a couple minutes. We use Lovable. You could use a website called Lovable, and it could build you a website in a couple minutes. Or you can go to a website called Fiverr, and you can pay someone in order to make you a website, right? It doesn't have to be a website with all the bells and whistles. It can be a one-page website with a picture of you, a short description of what you do, and how to contact you. Again, later on, you can upgrade and make the website better, but initially, you don't have to spend all this money on a website. Right now, we've covered a lot. I just want to take a quick check-in because we've covered a lot so far on the personal and on the business. So what I hope you've done throughout this process is I hope you've written down some changes or some things that you may or may not have been aware of yet to make your profile more predictable. If you have done that, I just want to do a check-in. Either write note in the chat and let me know that you've done it, or let me know some kind of change, what you may need to do or what you may need to edit, or a takeaway so far that you may need to do in order to position yourself for capital. While you do that, spell Lovable for perfect. I got you. Looking at the chat. Note, awesome. Lovable. There you go. I just put Lovable in the chat. Awesome. I see some notes. I see some Lovables. I see some comments in there. I do appreciate that. Awesome. So I will take just a moment. I will get a sip of water, and then we'll get into the second half. All right. Perfect. Now, every business, when it comes to setting up a business, because again, I don't want to assume anything. I want to make sure that everyone understands the multiple options you can use in order to access capital. So there's 3 ways that we typically look at a fundable business, right? You may either be a startup, or you're about to be a startup, you may have an aged corporation, or you may need to acquire an aged corporation, or acquisitions, mergers and acquisitions, one of my favorite, where you actually acquire other companies that are already operating, right? Now, there are pros and cons to every one, so I just want to mention all of them and go over them for the different ways. Now, startup. The benefit to a startup is that you can build it from the ground up. You get every choice for how you want to build the business, how you want to name the business, what you want it to offer, the colors, everything from the business is completely customizable because it's a startup. You have full control. Now, one thing is that a lot of people believe that you have a startup company, you're not able to get access to capital. That is false. A startup company can still get access to capital. It must be at least 30 days old. It still can get access to capital, but remember what we talked about earlier, the older an entity is, the older your history is, the more experience you have, the more reliable the application is. Therefore, funding is a little easier with older entities, right? So the pro to a startup is that you get full flexibility and full creativity to create whatever you want. The downside is it is newer entity, so it does make it a little older, but it is still possible in order to get a startup funded, right? Leads me on to my next thing, time. If you have, what is an age corporation? An age corporation, by definition, is a legal entity that was previously established and brought online as an active company. Now, let's break it down, because you may have an age corporation. You may have opened up an LLC. You may have previously opened up a corporation. It might have been some time ago. It might have been a couple months ago. It might have been a couple years ago. You may or may not have done anything with it. Maybe. But because you have this information now, you may not have thought, well, I started this business, I started this LLC, but it didn't really go anywhere, right? You may have an age corporation and you may not realize how valuable that is for you at this period in time. I consult with a lot of entrepreneurs who have older LLCs or corporations they haven't used before, but it was set up and established, so it has history. And now they can go and leverage that older entity in order to go and get funding, right? Huge opportunity. On the reverse side, and the reason this is beneficial is because longer credit history, longer age, you get broader access to financing. A key age that we look for when dealing with older entities is 2 years old. If you have a 2-year-old entity or you access a 2-year-old entity, it opens you up to a lot more financing options than businesses under 2 years. Specifically, there is a product called a business line of credit that is typically not available to businesses under 2 years old. But when your business hits 2 years old, now you get a broader access to capital and broader access to financing. Because why? Because the entity is older and it looks more secure, right? Now, if you have an age corporation that you established previously and you didn't think it was valuable, well, congratulations. You just found one of the most valuable pieces you can leverage in this process. The other alternative is if you don't have an age corporation, you can acquire other entities. There are people out here who will establish entities for the purpose of an age corporation, let them age so that when someone gets the information, they could acquire that age corporation and leverage those. Now, great opportunity. However, it's important for me to note, age corporations are a phenomenal strategy. We've been using them for a long time, but it's also important to say that every age corporation is not the same. Every person you deal with who deals with age corporations is not the same. So it's important that you work with someone who sells and also transacts quality age corporations so that you can make sure that you're in a good position to actually get what you actually ordered, right? Shameless plug, we deal with age corporations a lot. If you ever need an age corporation, we can help you source vetted and actually properly structured age corporations, right? And then leading on to acquisitions, one of my favorite ways to deal in business is acquiring other companies. Why? Because when you acquire other companies, most people, when they think about starting a company or having a company, they think of starting in the startup phase. However, a mindset shift, and why I love acquisitions, is because you can acquire other companies that are already operating. What does this mean? This means I can acquire a company that already has a team, already has revenue, already has traction, and already has contact lists, and I get immediate access to what that business has done without me having to actually do it. What does this mean? It means I can acquire a company and fast track growth and get immediate access to capital, leveraging what they've already done. Now, acquisitions are phenomenal. If you go to my pages, you'll hear me talk a lot about acquisitions and systems and funding. However, it's important to know there is something with age corporations, something called due diligence, which means that you have to work with someone and teams who are experienced in mergers and acquisitions, because you have to know what you are acquiring in order to avoid the pitfalls and make sure that you actually do proper due diligence, right? So these are the three different ways that we typically look at and help business owners get access to capital. Now I want to talk to you about the types of funding available, right? Because again, not all funding, when people hear funding, I want you to be aware of all of the different products and what those particular products are beneficial for your business, because every banking product is also not the same, right? So the first thing we're going to talk about is there's a couple different products we're going to talk about. We're going to talk about credit cards. We're going to talk about business lines of credit. We're going to talk about revenue financing. We're going to talk about SBA loans, another one of my favorite, and we're going to talk about term loans, right? So every one of these products has a different benefit, right? So what are credit cards good for? Credit cards and business credit cards are good for, one of the main ways and strategies we leverage these is for 0% introductory, right? Now, and fast working capital. So one of the strategies that we use, and one of the strategies that business owners use because they just simply weren't aware of it, is leveraging the bank's money and other people's money at 0% interest. Now, how does this work? Because I want you to understand the 0% interest is only for introductory, but you can learn how to leverage this the right way in order to build your business credit. So most 0% introductory is going to come introductory from 6 to 12 months. However, that's generally most of them. There are banks and lenders out here who will give you 0% introductory for up to 18 or 24 months. What does that mean? 6 to 12 months, that's 6 months to a year that you can have access to capital without paying interest on that access to capital. Or there are some that go to 18 months, which is a year and a half, or 24 months, which is 2 years. That gives a business a lot of opportunity in order to grow their business. And it gives you fast working capital. It's immediate, right? You don't have to do a lot of transfers. You swipe it just like a credit card, right? So those are credit cards, and those what those are used for. Business line of credit. A business line of credit is what I was talking about earlier. It works like a credit card, but it's in a checking account, and you get flexible access. And all you do is you just draw what you need when you need it, and it will deposit straight into your bank account as needed, right? Business line of credit works just like a credit card, but you can deposit it easier and make transfers directly to your business bank account. Now, revenue-based financing. If your business is making money, I'm going to tell you $10,000 plus a month, and you're looking for quick access to capital or a quick cash injection based on your business revenue, you can look at revenue-based financing options, right? And these are just things where it says, hey, you've got good financials, you've got good income, you've got good revenue. Hey, we can give you some short-term financing so that you can execute on the staffing, so that you can execute on the down payment for this building, so you can execute on this marketing campaign, right? Or SBA loans. SBA stands for the Small Business Administration. This is a government insurance program to lending, and they lend to a lot of good deals to small business owners or business owners alike, right? Now, the SBA loans are really good for when you want larger amounts and a lot of funding, 200,000, 300,000, $500,000, a couple $1 million in funding to do a commercial building or acquire a company, and this is larger amounts with longer repayment terms and one of the best interest rates you will find when you are looking for access to capital outside of 0% introductory. And then you have what are called term loans, which is what kind of most people are actually more familiar with. This is a set amount of funding that you would acquire, and you have fixed and predictable monthly payments. So you know how much money you get funded, you know how much money the business is paying back on a monthly basis and for how long, right? So it just makes it really fixed and predictable for you to access capital, right? There are multiple products. It's not, people ask me all the time, hey, what's the best product? There is no best product for every business. There is a best product for your particular business and your particular needs, right? All of them are amazing. It just depends on, again, what your business actually needs. And the ultimate thing here is that I teach you to do is, if it qualifies, if you or your business qualifies, we can fund it, right? That's what I teach you to do. Now, the next thing we're going to talk about is relationship banking, because relationships matter. They matter in life, they matter in business, and they absolutely matter in banking as well too. So let's break it down, because your relationship with your banker matters, and here's how you're going to actually approach it. Now, when you are communicating with bankers, people ask me all the time, hey, how do you get this information on bankers? How do you know what they request? How do you know what credit profiles they review? How do you know what documents they need? How do you know how long it's going to process an application? It's because we actually do it, and we build relationships with these bankers so that we get firsthand experience either from processing clients or feedback from the bankers, right? But this is how you can figure that out for yourself, right? So the very first thing is, when you are going to open up a bank, there are some things that you need to bring. A clear business explanation. You do not want a long, drawn out business explanation. You want a direct, to the point elevator pitch. The more direct, punctual you are, the more you look like you are used to explaining your business, the better it is going to be for the banker to deal with you, rather than this long, drawn out answer that could potentially raise red flags, or you just don't look prepared to explain your business, right? So you want to bring a clear business explanation. You want to bring deposit funds. Remember, the more money you bring, the better. At least at minimal, bring $100, unless the bank you are going to has a minimal below that, right? But you need to bring the deposit funds so that you can make a deposit in the bank. You don't want to go open a bank account and then they ask you to make a deposit and then you say, I don't have any money to deposit, right? That does not look good to the bank. Please don't do that. At least bring $100 and just say, hey, I have $100 on me cash. I'll go ahead and deposit that today. That looks a lot better than saying, hey, I have no money to deposit at all, right? Please bring deposit funds. Bring your personal ID. Bring your driver's license. Make sure that your address is matched. Make sure that you're easily verifiable. And then also, you can also bring in, you also want to bring in your entity documents, right? So all of the letters and all of the documents and all the paperwork that you get from setting up your business, you want to bring that as well. Now, best practices. I would kind of talk about this in what to bring, but in best practices, keep it short and direct. If the banker or lender has more questions, they will ask, but they want to work with people who are short and direct. Why? Because it looks like you've been there before. When you have short and direct answers, you look experienced. When you have long-winded, choppy answers, you look inexperienced. When you are communicating with lenders and bankers, you want to put yourself in a different conversation quality than everyone else that this banker is dealing with, right? How do you do that? You keep it short and direct. The next thing is focus on a long-term relationship. Hey, I'm interested in using your bank and their products because I've heard they're great products and I'm looking to grow my business. So I'm looking to use this access to capital or this relationship in order to fund my marketing plan over the next year, 2 years, 3 years, long-term, right? It's always long-term focused, not necessarily just what you can get in the short term. Give me like 10 seconds, get a sip of water, and we'll get right back to it. The next thing, show up early. If you show up on time, you are late. Please When you are looking for access to capital, be at these meetings early. Don't show up late. Don't show up right on time, right? There is a very punctual schedule. Show up early. Again, you look professional and you also look prepared. And the other thing is you want to use a low risk industry code. And what this means is you need to explain your business in a clear way for how it is going to grow and how it is going to progress and use this capital for the long term. You want to be a low risk industry and a low risk applicant when you are applying for financing, right? What to ask? How do we know what credit bureaus they pull? How do we know if they're going to review TransUnion? How do we know if they're going to review Experian? How do we know if they're going to review Equifax? We ask because a lot of people believe that when they go apply for financing, they think that a lender is going to check all 3 credit reports. That's generally speaking not the case. Most lenders will review 1 or 2 of the 3. There are, of course, some lenders who will check all 3, but most lenders will only review 1 or 2 of the 3. How do you know which ones they review? You ask, right? So when you're communicating with the bankers, hey, I'm looking to apply for a business credit card. I'm looking to apply for a business term loan. I'm looking to apply for an SBA loan. Just out of curiosity, what credit reporting agency do you look at when you're applying for these products? They're going to tell you. If they know, they should know. But how do you get the answer? They just tell you. The other question, and this is a huge question, this can give you a large additional access to capital, is you're going to ask them, can you apply for multiple products? What happens, the assumption here is most people come into an application and they say, hey, I'm looking for a business credit card. And they don't realize that they could apply for multiple business credit cards, or they could apply for a business credit card and a business line of credit, or a business line of credit and a term loan, or any combination of those. A lot of people leave a lot of money on the table just because they don't ask this question, because people believe, hey, I'm going to submit an application. It's only for one product, not knowing at the same time for the same inquiry, they could have gotten 2 or 3 different products at once, right? Huge. How do you know this? You ask them, hey, can I apply for multiple products at the same time with the same inquiry? They're going to let you know yes or no. Another question is, remember, you want to be prepared. So what documents do they need? Every bank needs different documents, especially when it comes to financial documents. Some banks ask for a lot of documents. Some banks don't ask for any financial documents, right? How do you know what documents they need? You ask them, hey, I'm looking to apply for a business credit card, just out of curiosity. What all documents do I need in order to apply for this product? I'm looking for a business line of credit. I'm looking for a business term loan. I'm looking for an SBA loan. Just out of curiosity, what all documents do I need to have prepared to be mindful of your time when I'm applying for these products, right? Huge question. The other thing is, what's the timeline? Sometimes you can open a bank and you can apply same day. I don't recommend applying same day. I typically tell all of our clients to wait at least 30 days, but that's bank dependent. Some banks, you can apply same day. Some banks, you don't even have to have an account to open and apply. Some banks, you have to wait 6 months after the bank account is open before you can apply. Does that mean it's right or wrong? No. There is no right or wrong. It just depends on what particularly aligns for your business, but you need to know the timeline, because if you need funding 30 days from now and you're going to open up a bank account, you need to ask how long or what is the timeline before I can apply for products, because if you need funding in 30 days, it's not going to benefit you to open up an account that they make you wait 6 months before you can apply for financing, right? I've seen the pitfalls. I've seen the mistakes that people have made. And so that's why we try to make this as simple as possible for you so that you can get ahead of it beforehand, right? Oh, hold on. I just got cut out. Hold on. There we go. My bad. I had a technical error. My apologies. Okay. Well, uh-oh. Okay. All right. So for some reason, I'm having some technical difficulties for the full presentation. It might look a little reverse, but do me a favor, if you can put a 1 in the chat, if you can still see my screen. It won't just be the single the single slide that I was doing, but okay, perfect. Don't know what happened. Sometimes, again, we love tech, but sometimes tech just be giving us a little bit of difficulties, right? So went over all of the information that you want to, what to bring, best practices, and what to ask. And the next thing is, again, we've covered a lot of information so far. I try to make this as simple as possible. I just want you to do me a favor. I just want to do a quick temperature check. If this has taught you something new today, or if you're finding this valuable, just do me a favor and type win in the chat for me. And while you do that, I'm going to get a sip of water. Awesome, awesome, awesome. A lot of wins, a lot of wins. I love to hear that. That gave me some energy. That's what I come here for. I just want to be as valuable and explain this information as simple as possible, right? Now, I want to give you some examples. And I like the examples that we're about to give because they come from a lot of different backgrounds. A lot of times in this, it's not where you start, right? A lot of times in this, it's you didn't have this information prior, you didn't know, so you just operated differently, right? They say if you know better, you do better, and sometimes you just didn't know, so you didn't know exactly what to do. And the reason I want to give you a couple examples of a couple different scenarios, because sometimes you're in a great position to start immediately, but sometimes you have to go through a process. And if I haven't made this clear enough yet, I want to make sure that this is really clear. Funding, all of the work for funding and accessing capital is done before you ever submit the application. But understand it's a process. It's not a magic button and you just all of a sudden get 20, 10, 20, 50, 100, $200,000. It's a process, because what you have to understand is what you want versus what you qualify for are two completely different scenarios, right? And you may or may not qualify today. But by following the process and doing the things that I teach you, you can position yourself at a time, whether it's now or later, in order to access capital. The reality is, if you don't start, you're not going to put yourself in position to access capital. So that's why we talk about this, because when we relay this information, we want you to take action immediately so that you can start that process, because waiting or delaying doesn't get you any closer to the objective of accessing capital, right? So with that being said, I want to go over like three just different scenarios, just as some clarification or some insight to how you can actually progress regardless of where your situation is or regardless of what your mindset is. Before I do this though, I have to always say this again, nothing in funding is guaranteed at any given time. This is a game of probabilities. This is a game of understanding how to position the information and data to put yourself in the highest probability of an approval by the time that you submit the application, right? So the reason I say this is that I want to show some information, but as a disclaimer, past performances do not guarantee future results. Now, with that being said, I like to go over a couple different scenarios because, again, it's not always about where you start. It's about where you're going to end up after you get this information, right? So one of the examples that I want to talk about is a guy named Marcus. He is amazing, or I like this story because he is an aspiring entrepreneur. He came to us with a 590 credit score. Now, he came to us the way a lot of clients come to us. Hey, they saw something on Instagram. They saw something on social media. They saw something on YouTube. This guru said, go to this bank and that bank and that bank. They didn't understand any of the data points. And they just say, go apply here and you're going to get approved. And what do you know? Somebody didn't know this information. They just went somewhere. They went all over the place. Couldn't really figure out what was going on, right? So at some point, people are like, hey, I followed all the gurus online and I'm getting denied. I can't get anything, right? And so the reality was he was denied. He was in that scenario. He was denied all over the place. But the reason is because he thought funding was just submitting an application. He didn't understand all of these different things that you understand today. So he was just basing off on there going random. Remember, nothing about this is random. So what we realized was he had outdated addresses. It was all over the place. He had high card balances, almost maxed out. He had late payments. And the reality was he just thought funding wasn't an option. So what we did, he came through our review. We helped him understand today, hey, Marcus, you reached out to us, you're requesting, $100,000 in funding. However, today you don't qualify, and this is why. And we helped him understand the exact denial reasons, because you can't solve a problem that you don't recognize. You have to recognize a problem before you can ever solve it. So Marcus, we helped him understand his exact denial reasons. We helped him review the information that he just didn't know. We gave him resources to help him clean up his credit report, lower his utilization, and build positive reporting accounts. And by leveraging all of the things we talked about, plus the relationship banking, he was able to go to the current #1 bank in the United States, Chase Bank. From one bank, he was able to get $75,000 from Chase. Is this a typical result? No. Is it a possible result? Yes, if they follow the process, right? So he was able to go to one bank, get $75,000 from one bank. The other part here is he got a business credit card, which was the Chase Inc. Business Cash. That particular product comes at 12 months, 0% interest. He had 12 months to leverage $75,000 without accruing any interest to invest in his business. What did he do? He had a mobile detailing business. He was able to invest into that. He was able to invest into marketing. He was able to upgrade his equipment, and he brought on some staff, all without touching his savings, right? Huge opportunity for someone who previously didn't think that they would ever get access to capital, right? On the flip side, there's another guy, Michael. Michael was awesome. And a lot of times whenever we talk about funding, it's sometimes there are people, and what we find a lot of times is there are successful entrepreneurs and successful business owners who are doing great things already. However, they may just not realize a key word that we teach is leverage. So this was the situation for Michael. Very common situation. Successful entrepreneur, very successful business, pretty large team, well-known reputation, right? Great guy. His problem was he was looking for high access to capital, and he thought that every bank was the same. He didn't know there were over 4,000 banks in the States. He just thought that, hey, I've been banking with this one bank. Every bank's the same. They're the best bank for me. And he came to us because he was trying to get some deals done, and he couldn't get it done with his institution. And so what ultimately happened was he came to us and he was trying to make an acquisition. The bank that he was trying to do just wasn't giving him the funding. They were giving him like a tenth of what we were able to facilitate for him. And it just wasn't doing him because he didn't understand that banks are different. They operate different. It's based on relationships. So what we did was we helped him understand that, hey, Michael, what you've done already is great. We don't want to interfere with anything you've done already. However, what we just want you to realize is there are other opportunities outside of the one bank that you've been dealing with, because not every bank works the exact same. And ultimately what we did, we connected him to one of our lenders. We helped him structure the use of funds plan. Remember, growth focused. And ultimately, as you can see over there from the screenshot, he was approved for over a little over 300,000 from one bank. Successful entrepreneur, worked with his other bank for years, couldn't get it done. Came to us, we facilitated. He helped understand the coaching. He helped understand the process. Go to one bank. You can see he got a little over 300,000 from one bank. He only accepted the 300,000. He was actually approved for like $350,000. An amazing result, right? And the reality was, he didn't have to replace his bank. He didn't have to choose this bank or that bank. We just had to change his mindset to this bank and that bank. It's what you've done already is great, but we can add something else additional to it, right? So these are the kind of results that you can look at, that sometimes you're dealing with successful entrepreneurs that are just limited in the options that they currently have. And the last option that I'm going to go over here is Eric. Eric is one of my favorite case studies because I personally like hard conversations. I actually like working with non-believers. Why? Because when you take a non-believer and you turn them into a believer, it's going to be one of your best case studies. It's going to be one of your biggest advocates. That is the scenario with Eric. Eric was a 10-year entrepreneur, seasoned entrepreneur. I mean, the poster boy of self-funded, bootstrapping the business, doing it right, everything, quote unquote, the hard way, right? Because I want to teach you how to do it the smart way. And so ultimately, the scenario here was that Eric was misinformed. He was just informed that debt is bad, the banks are out to get you, you know, everything was really against him, right? And so ultimately he bootstrapped everything, but it was ultimately just like generally it happens. The more access to capital you get, the easier you can do to progress your business. And so ultimately his business was slowing, it was burning him out. What we helped him understand is something that I tried to get you to understand in the beginning, is that banks and lenders are in the business of lending. They are there for you to leverage if you understand how to do it the right way. So ultimately what we did, we helped him understand their language. We helped him structure his business. We helped him organize everything to make sure he was good. And then we were able to take him to one bank, one of our favorite banks out in the Midwest. It's a bank called Key Bank. And I like this scenario because one, Eric was against lending. We helped him understand that it was, you know, a viable option for him. And it's also an example, if you remember earlier, one of the questions I said to ask was, can you apply for multiple products? Eric is a key example of that he didn't even know. And he would have left $40,000 on the table because he didn't know. He didn't have the information. So what we did was we took him to Key Bank. We were able to go to one bank, process 2 applications, a business line of credit and a business credit card. As you can see, he got a $50,000 business line of credit, a $40,000 business credit card. He got $90,000 from one bank. From one bank, when he initially believed that he was never going to get funded, he was going to lose all control, everything was against him, and it wasn't beneficial for him. And for someone who has bootstrapped their business for so long, and then you get an additional $90,000 that you can use to grow the business, that is a huge opportunity and solved a huge gap for him. And that's why I like Eric, because now Eric's one of our biggest advocates for our services, because he was what? He was a non-believer who became a believer through the process. And the reality of everything that I talk about here is, again, those aren't necessarily typical results. Every funding deal is different. I've told you from the beginning, in a decade doing this, I've never seen 2 funding deals the same. However, when you follow the process, you'll understand that funding isn't luck. It's a system. It's a process. And if I haven't made that clear enough yet, please understand clients or funding is a process. But when you follow a strategy that I teach you, they didn't know the information that you got today. If they had known it prior, they would have been in a much better scenario. But the reality is they didn't. And it's the same exact process that I'm teaching you today. And they had a roadmap. They knew which banks to approach and when. They knew the language. And they understood how to structure their credit and business to qualify. And this is why we call ourselves the funding playbook, because we give you a step-by-step applicable playbook to help you understand how to actually position yourself for capital. So we covered a lot. So we're just going to kind of recap here and bring everything up and break it down into 4 phases. So this is the funding phase. These are the 4 phases of a funding roadmap. Phase 1 is you need to see the foundation. So the main credit reports that we talk about, remember, are TransUnion, Experian, and Equifax. You need to review the information that is being reported on your behalf. So what you're going to do is you're going to pull all 3 credit reports. There are a lot of sites out there. We use a platform called Identity IQ. There's all kind of paid sites out there. There's sites you can go like annualcreditreport.com, and you can look at your reports there. There's all different ways that you can access your credit report, right? The most important part is that you get the credit report, because you don't know what's being reported on your behalf until you actually pull it and you read it. So number 1, you're going to review all 3 credit reports. Then what you're going to do is you're going to review the information that they have, and you're going to need to make sure that your name and your address matches everywhere. If you have any negative remarks, that's okay. Currently, remember, not about where you start, but you can't solve a problem that you're not aware of. So if you have any negative remarks, it's important that you go through a process to start taking care of those. Phase 2 is stabilize and prepare. So if you have high card balances, hey, we want to start working on a budget in order to manage those. You want to open up your business bank account, and you want to gather all of your key documents to make sure that everything is organized properly. Then you're going to move on to phase 3, which is where you start to verify and plan. So what you're going to do is you're going to identify your strongest reports. You're going to map out which banks to approach first. A great idea is, hey, if you don't want to get super technical, take a drive through your city. Check out the banks in your area. Call them, pull up to them, right? Go and interview them and see what information they have in order to facilitate the deals that you're looking for. And then you want to get pre-qualified, right? Phase 4 is actually executing and review. You want to apply in a smart sequence. You want to log your results and adjust. And you want to plan the next round based on the results of your sequence. Now, let me explain something here. This is important. The reason we call it a funding plan, the reason we call it a funding sequence is because there is a series or sequence of banks in order for you to get access to capital. So let me explain. When you follow the things that I teach you and you put yourself in position, the way that I've taught you through here, it is absolutely possible to get $50,000, $100,000 plus in funding. However, generally for most people in most scenarios, they cannot go to one bank and get 50 to 100,000. Is it possible for some and certain banks? Yes. But generally speaking, that is not the assumption. That is the exception to the process. So the reason I say that is when clients position themselves for funding, absolutely possible to get 50 to 100,000, except I want to set your expectation that you're not going to get it from one bank. If you do, phenomenal, congratulations. However, the expectation is that you're probably going to need 2 or 3 different banks in order to get the access to capital. So for example, if someone's looking for 100,000, it's a lot more realistic to go to 4, 5, 6 different banks and look for between 10 and 20,000 from each bank to build the cumulative access to 100,000 than it is to expect to go to one bank and get 100,000, right? This is why we call it a sequence and a funding plan, and you are executing that particular funding plan, right? Now, what do you need to qualify? There are credit-based qualifications, there are income-based qualifications, right? So what do you need to qualify? There are 3 C's that we look at whenever it comes to financing. It's credit, so your personal credit and your business credit, your cash, so either your cash flow and revenue for the business or personal income on the personal side, or collateral, right? Now, I hate credit scores. I absolutely hate talking about credit scores, but generally speaking, because it's for educational purposes, if you're generally looking for credit-based financing, you're going to need a 680 plus credit score on the personal side across all 3 bureaus or across any of the bureaus that you're looking for financing. Remember history. You want at least one major credit card that is a Visa, a MasterCard, or American Express. You want a major lender credit card for good, what are called comparable limits. You, with that year-old credit card, you really want a $2,000 plus limit. Can it be less? Yes. But then we have to reset your expectation for you would look for lower amounts on the business side because you have to build those comparable limits, right? No derogatory remarks, no late payments, specifically none, but at bare minimal, none within the last 12 months. No more than 3 inquiries within the last 6 to 12 months. And you want your card balances between 1 to 30%, like we talked about earlier. Now, what to bring? We kind of touched base on this a little bit earlier. Your personal ID for your driver's license, proof of address could be your driver's license. It could be a utility bill, a lease, the EIN letter from the IRS, your articles of incorporation for your business bank statements, and an explanation of your business and use of funds, right? Very, very important. And when you do all of this, or when you have all of this, this is what you're going to use in preparation in order to submit your applications, right? Now, we've covered a lot, and I try to give you as much applicable information and value as I possibly can in as short as amount of time as possible. So ultimately, what is the next step from here? You have 2 options. You can take what you've learned today and go and do it yourself. And the reality is you're going to be better prepared than a large majority of people applying for funding, because most people don't have this information. Most people didn't do all the preparation that they needed to before they submit that application, right? So you're going to be in a large majority advantage by applying the information that I taught you today. Or you can let our team guide you every step of the way, right? So what that means is a personalized audit, a custom funding sequence, expert funding strategy, structure, and support, and access to our proven network and resources of bankers. Either way, I just want you to take action in whatever way. That's why we come in here to execute, because I want our communities to have access to capital back into them. This is why I'm so passionate about what we do, because it helps give our communities opportunities that we didn't have or know how to access before. So regardless of either way you choose, you now have a roadmap. The number one question is, and really the only question that matters, is really how fast do you want to move throughout this process? And that is really it. Now, again, I'm someone who likes to set all of the expectations. When someone works with me or when they hear from me, I want them to say, hey, Dorsey gave me great information. He let me know all of the game, and he gave me all of the information that I needed to make an educated decision, right? So a lot of people at this point, they say, hey, Dorsey, I would love to work with you. It's probably thousands of dollars just to have a conversation with you and your team. And we operate a little bit differently. So I'm someone who believes in delivering the result, right? I don't believe in all the talk and saying we can do this and saying we can do that and having people pay all this money up front and then they're left wondering, is it going to be done, right? We don't like operating like that. So the way that we like to operate is on a performance-based model. So what this means is that we don't charge anything up front to work with our services. What this means is that we take on all the risk, we pay our team, we facilitate the deal from start to finish, and we only get paid if we successfully get you funded. So the way that we work is as a performance-based organization. We don't charge up front. We deliver, we provide all of the intellectual property, we do all of the information, we facilitate the deal from beginning to end, and all we want is a small tip on the back end. So the way that we work is we earn a 10% performance-based commission after you have been funded. Now, again, I like to cover everything because I want to work with who wants to work with us. So some people hear 10% and they say, hey, that's way too high. But what this actually means is that there's no guesswork, there's no retainers, and ultimately for you, there's no risk, because we have to take on all the time, we have to take on all the effort, we have to be able to pay our team in order to facilitate the deals. So there's no risk because we only get paid unless we facilitate the deal, right? Number two is a proven process, expert support, and real banking relationships. So we already know the banks. We already have the data points. We already have the support team. Our team already knows how to advise you, regardless of what situation you're dealing with, because remember, no funding deal is the same. None. They're never been the exact same in our experience in 10 years of doing this. And so you have to have expert support that is able to facilitate the deal regardless of what happens to you, right? And then ultimately you save time, you avoid costly mistakes, and you walk in to funding with confidence. The reality is you're not paying for a maybe. We only get paid if we deliver. So you're investing into strategy, results, and momentum, which are paid only after we deliver the results, right? So what is going to happen is 7 ways. And Christina, they are going to have a link. They are going to put it in the chat, in the community, in the chat. You'll be able to use that link. You'll be able to fill out a very short form, and that form will allow you to figure out your first steps to get funded. It will allow you to schedule a one-on-one appointment with someone from our team in order to help you get this process done and get this process started. And ultimately, regardless of whether you're ready to get funded today or whether you think you might have some challenges, it's okay. We offer the complimentary audit to everyone because, again, you can't fix a problem you're not aware of, right? So you can work with our team, and our team can help you figure out what those first steps are for you in order to get funded. Now, very important, when you do this, I want to set a couple expectations. When you do this, you're going to fill out the form, you are going to submit your information, and you are going to get some notices. The first thing I want to say is when you book your appointment, immediately check your email. Depending on your email settings, it may be in your spam or your promotional folder. So when you book it, immediately check your email. And if you don't see it there, look in the spam and promotional folder, because there's going to be a lot of great information. There's going to be some videos that I've done in there to help you set all of the expectations so that you know what you're about to get into, right? Now, the other thing is that you will get some text confirmations. If you have some questions about your appointment, or if you need to reschedule, those are automated text messages, yes, but there is someone on the other end of those messages. So if you have questions, or if you need to communicate with our team, you can text back and you can have your questions or your concerns answered there. Now, a couple things to note. We are primarily a text-based support system. When you text us, we service a lot of clients. Please do not expect an immediate response. You will not get an immediate response. However, typical response times are 3 to 24 business hours. Now, what's going to happen is the call that you are scheduling, it's what's called an intake call. We have no idea what you qualify for until we help you, walk you through getting access to your credit report and reviewing your business information to see what you could potentially qualify for. So understand, that's the call you are booking. It is scheduled for a 30-minute call on Zoom. You must show up on time. We are a professional business. We expect all of our clients to act accordingly. You must show up on time. If you are late, yes, you will have to reschedule, right? Very, very important. Show up on time. Choose a time that you know you can get and make it to. If you are unable to make it at that time, for whatever reason, please text our team ahead of time and let them know that you need to reschedule within a reasonable time period, right? We have a very heavy schedule. We have a lot of demand. We want to work with those who want to work with us. If you are unable to make your appointment, please let us know so that we can open up time for someone else who is looking to make up and show up to their appointment. Now, the next thing, you must be at a computer. There are mobile, if you're not familiar, mobile and desktop work a little different. Sometimes when you're uploading and downloading files, which is what you will be doing because we're going to need the credit report and we're going to need the business information, it's a lot easier to do from a computer, and we only have 30 minutes to get it done, right? So please be at a computer. It's scheduled for 30 minutes. If you follow everything that I'm telling you, you can be done in 15 minutes. But if you're not prepared for the call, right, then it may take the full 30 minutes. And yes, we are looking for access to capital. You're looking for access to capital. We have to review your personal and business information. You can tell us everything you want to tell us, but again, we can only go based on the paperwork. So yes, you have to have and be willing to share your personal and business information. It does not matter. There is no way that we can facilitate or help you figure out what's going on if you're not willing to share that information, right? So you must have and be willing to share all of your personal and business information, the applicable information, so that we can actually help you understand where you are, what you potentially qualify for, and the first steps to get you funded. Now, with that being said, I try to make this as fast, simple, and direct as possible, but of course, there are probably some questions. So what I wanted to do is I wanted to leave some time open at the end so that we can cover any questions that anyone has. So if Christina, if you want to hop in here and kind of facilitate that, or I can, either way.
Yeah, absolutely.
Perfect.
Yes, thank you so much, Mr. Dawsey. We always appreciate you coming on and pouring into the community and educating us on the things that we just do not know. Like a lot of our forte is not business funding. We don't have those banking relationships. And the fact that we can leverage you and your expertise and your banking relationships is a gold mine. So I do want to open up the floor for Q&A. So go ahead and raise your hand so that you guys can ask questions only for Mr. Dorsey, not for me, okay? So I see Nicole's hand up.
Hello.
Hey,
Hey,
how are you?
Hi. Good day to all of you. My question is the credit, is this for a business or is it for the business trust?
Great question. So what I teach is to keep the trust private. You can absolutely get a trust funded. The first thing I want to clarify is you can get a trust funded. It's a little differently because trusts work on contracts rather than, kind of like state public entities. So what I teach is the intention. There are multiple ways to get it done, but what I teach is to keep the trust private and leverage public entities like LLCs or corporations to operate in the best interest of the trust and keep the trust private.
Okay, that's what I thought. Okay, thank you.
Of course.
next we have Angelica.
Thank you for taking my question. So my question is, there's a lot going around like social media about no doc loans. Do you work with no doc loans and like preparing for that? And can you explain why those aren't, you would suggest or recommend that, or you would advise against that route?
Phenomenal question. So great programs. They are actual programs. Now, something to understand about No Doc, they're a great program for a lot of business owners. That's kind of what I was kind of alluding to, that there's an option. Every bank works a little bit different. Some banks are going to request full financials. Some banks aren't going to request any financials, AKA no docs. Now, kind of the simple way to explain this is those are viable programs for a lot of business owners to be able to use their projected income, their expected income, or their household income in order for consideration for application. In order to qualify for no doc, you have to have great credit, because what the bank is essentially saying is they're saying, hey, based on your credit, based on your history, we're going to trust what you say and what you do in consideration for this application. So are no doc programs out there? Absolutely. Do we use them for business owners? Absolutely. It's just if that particular business owner qualifies for that particular no doc program. You do have to have good credit. There is not just, banking is not just getting a lot for nothing. And sometimes on social media, it does, it can be, certain people will make it kind of seem like that. You do have to qualify for the funding that you're getting, whether credit wise, whether income wise. But to answer your question, yes, no doc programs are a viable option if someone can, actually qualify for it. Does that make sense?
Yes, thank you for answering that.
Absolutely. Absolutely. Any other questions?
Hey, Brian, I had a question about the seasoning of the LLCs. I know you said that the 2
Hi,
years.
Stacey. Stacey, give me one moment. There was a couple other hands raised.
Oh,
If you'll
I'm
just do me a
sorry.
favor.
I'm sorry.
Yeah, no worries, no worries. Just do me a favor, raise your hand, Stacey, and I will definitely get to you. It looks like Raquel is the next one.
Hey Brian, nice to meet you. Thank you for all the info. I had a question about, so you say you're gonna use our personal credit. So if we're gonna be creating a trust, would you still need our personal credit to get apply for the loan, or we're just gonna go through the trust?
Phenomenal question. So let me kind of break this down as simple as possible. So there's a difference between business credit, business funding, corporate credit, and trust credit. So the first thing is, trust can absolutely get funded on their own, but you have to have the assets in order to do it already, and you have to build that. So what I teach is to leverage business credit and business funding with public entities to operate in the best interest of the trust. So when it comes to those entities, most people don't have strong enough business credit in order to just get financing on their own. If I know the internet sometimes can make it seem like this, so I just want to clarify. Credit will always come into consideration, regardless of whether you're looking for personal funding or business funding. Credit will always come into consideration until you get to corporate credit. Corporate credit is different than business credit. Corporate credit, generally, to get really just corporate credit where it's just your business, on the minimal, you really need 2 million in verifiable revenue. Oftentimes you need 10. You need 10 million in verifiable revenue. Why? Because banks, like I said earlier, banks are always fighting fraud. So banks need to know that if they are going to only give financing in the business and only the business is responsible, they need to know without a shadow of a doubt or the highest probability that that business can facilitate it. So what I teach is to leverage personal credit to get business funding that builds business credit. And eventually, with strong enough business credit, then you'll be able to graduate where you can just get things in your business name. What this kind of, let me kind of make this a little relatable. So a lot of times when people are first building credit, right, let's say they want to go get a car, and they may get a car, but then the lender may say, hey, do you have a cosigner? The cosigner will help that person get access to that car. And then the person who is paying on that car, after they build up history, then they'll start to build a stronger credit profile, where eventually now that person has a strong enough credit profile to get it on their own. That's exactly how the business works. The business has to generate credit and enough credibility on its own before it can get financing strictly just on the business. Does that make sense?
Yeah, it makes sense now. Thank you. And then
Perfect.
question, so if we do go through you, do you help with personal credit to improve it? Because I don't have really good credit. So I don't know if you or Christine help with credit.
Understood. So for us, we are just a funding company. We only facilitate funding, not the credit repair aspect. However, when you come through us, this is why I was saying, it's okay if you're not in position today. It's perfectly fine. Again, it's not about where you start. It's about where you're going. So the benefit of it is when you come through us, even if you have some credit challenges, our team is going to be able to identify that. They're going to be able to give you an exact plan in order to execute. And then what we do is we don't do the credit repair ourselves, but we have a trusted resource that we send all of our clients to. You would go to them, to that to the third party. They would fix your credit. You would go to them with your with the plan that you get from us. You would go to them. That person and their company would facilitate the fixing your credit. And then once it's fixed, then they would send you back to us, and then we could actually proceed with the funding process. So that's how that works.
All right. Thank you so much.
Of course, you're very welcome. You're very welcome. All right. It looks like Latanya is next.
Hello, kind sir.
Hey.
I heard you earlier say with the no docs, your credit has to be really good. Just ballpark figure. I mean, wise, number wise, what does that number look like? That credit
680
score.
credit score. Yeah, 680 credit score. With like no late payments, minimally really within the last 12, ideally none within the last 24 months, so year or 2 years. And no collections, no charge-offs, no bankruptcies, things of that nature. That's pretty much what would qualify for the no doc.
Okay, so the number is less important.
Correct.
Like you said,
Absolutely.
680, so it's stayed up.
Correct.
Perfect. Okay, thank you so much. I appreciate you.
Absolutely. You're very welcome. All right. It looks like, forgive me if I pronounce the name wrong, but it looks like Rana.
Yeah, Ray.
Yes. Hi, it's Ray.
Gotcha,
How are
gotcha.
you?
Okay. I'm good. How are you?
Thank you. Good. Quick question. I got a HELOC,
Okay.
and I did it because for the business I was getting some work done outside, and we ran into this huge snowstorm. So now I'm backed up. I got a pretty good rate. Would you, is that something I could leverage like credit cards in order, the 0%, in order to kind of fix that? Because now I don't quite know what to do. I'm stuck. So I was going to go back out to try and get something so that I could not be bound by this HELOC when they change the funding, because now I'm going to have to pay those really high interest costs.
Understood. Yes. Now, HELOC, just in the short answer, yes, you can, and it would be highly beneficial, especially for a lot of people that we work with. They'll do renovations or something like that, or updates on a 0% business credit card, or a 0% card to keep and manage their cash flow. One thing that will come into consideration, though, and it's not to say that you can't do it, it just might have to have some strategy. A lot of people, whenever they get a HELOC, if you remember earlier, I was talking about utilization. A lot of people don't realize that those HELOCs affect their utilization. So it would come into consideration depending on how much or what percentage of that HELOC that you are using, because some lenders are understanding that, hey, the HELOC works a little bit different, but other lenders will judge you or qualify you based on how much of that HELOC you are using. So if that's the only thing holding you back, I would say absolutely, let's work on trying to transition over to the 0%. It's just that it may take a little bit of strategy to get there, just depending on how much of that HELOC you are using. Does that make sense?
Yeah, I wasn't going to use it. And I went to another bank to use another facility, and they denied it. And I asked the woman, I said, is there something wrong with my account? She says, no, but you just did this. I said, yeah, but I didn't use it because I was going to wait and use another facility that I thought was better to cash flow my property quickly. So that's just it. I have two properties I need to get fixed before the summer comes in. I was trying to get it, and then it's like, oh man, maybe I shouldn't have used it. So I think I'm going to probably reach out to you guys just to try and figure out how I can better do this to get these two or three properties up and running and not have to use because Christina told us before, I think it was Christina, somebody was talking about not using so much of this money, and that's my concern, because if I
Definitely
have to
wasn't
use
me.
it, you
Definitely
pardon?
was. I say it wasn't me.
Okay. It was someone who was saying you got to be very careful about what percentage of a HELOC you use. So
Yeah,
I'm glad to know that. So we'll reach out to try and figure that out. Thank you very
absolutely.
much.
Of course, you're very welcome. And just really quick to clarify, if you're not using the HELOC, that's fine. And really the most viable option would be going over to the business side, because it's really hard to get two HELOCs. You're going to come into that same scenario. It's like, hey, you just got a HELOC that you're not using, because now the risk becomes you may be over leveraged, and that's what the bank is really concerned about. So yeah, it's really hard to get two HELOCs, especially in a short time period.
Yeah, thank you.
Of course, you're very welcome. All right, it looks like Stacy, you are up next. You can go ahead and ask your question.
Okay, cool. Thank you. Got a couple for you.
All right.
I wanted to know when you get these loans or when you get these 0% interest cards, whichever it is, do you have to pay them back completely before you qualify for more business funding?
No.
Or is
So
it just about paying them on time?
it's just about paying them on time. So business credit scoring works a little bit differently, or a lot differently than personal credit. So the key point to business credit cards, it depends on the product. So let me try to make this as simple as possible. If you only want business credit cards, because there are some investors who learn about 0% and they're like, hey, I am never paying interest again. And they just leverage 12 months 0% over and over and over again. If you're only looking for business credit cards, utilization doesn't really matter, right? Now, if you do start to transition where you want to look at like business lines of credit or business term loans at some point, then yes, the utilization would matter. The key point is you kind of want, if you're looking for business lines of credit and business term loans, you probably want to sit at like 50% utilization. And you really don't want to go over that. But if you're really just looking for business credit cards, you're not really going to come into that issue.
Oh, okay. That's good to know. So with the business credit cards, is that kind of easier to go for, I guess, another round of funding after manage it properly? I'm assuming they want to see how long does it normally take before you can go back and ask for more money?
Phenomenal question. So this is something that gets into a little bit of strategy. So the reason 0% is really beneficial is because as long as you have good credit, there's typically not as much financial documentation it varies by bank, but generally when people ask about no doc, it's typically either a business credit card or a business line of credit. Most banks, when it comes to business line of credit or business term loans, are going to ask for doc. So the reason this comes into benefit is because all banks are competing against each other for business. So remember, there's thousands of banks. The reason people like 0% over and over again is because there are thousands of banks who offer business products. A lot of those business products are competing with other business or with other lenders, so they have those 0%. The strategy here is understanding, if you catch the gem I'm about to pick up, it's amazing. So on the personal credit side, the funding that we teach you how to do is leveraging personal credit to get business funding, but it doesn't report to the personal credit. So what we leverage is there's a law in the FCRA, and it says, this is not legal advice, but it says, if an account or an inquiry is unable to be verified, then it must be removed. So what we do is we leverage this to our advantage. When you acquire or you apply for a business credit card, the inquiry will temporarily show up on the personal credit report. However, the funding we teach doesn't report to the personal credit report. Therefore, if you made the decision to dispute the inquiry and it's not reporting to the personal credit report, then the inquiry must be removed. Therefore, if that inquiry is removed in that particular scenario, that means you could acquire business funding without being penalized for it. And that means you could, in that particular scenario, acquire other business funding, if that makes sense.
Yep, that makes perfect sense. That's awesome. Okay, and I'm sorry, I just have one last question because you talked about the time in and I guess the new LLCs. And there is a lot of talk online about, oh, you can, anybody can qualify with the new LLC. And you talked about the credit. So if you do have good credit, and if you, I guess, have, some stuff in there, it's not too thin, is that where you might be able to qualify for funding, even with a new LLC, in case
Yeah.
you want to do new LLCs so you can
Yeah.
get more funding?
Yes, absolutely. Yes. That is where that comes into play.
Okay, perfect. Thank you so much.
Of course, you're very welcome. All right. It looks like Maria Harris is up next. You are muted currently. Just there you go.
How you doing?
Hey, I'm good.
So a couple of questions I asked in the chat, but I think they were answered, some of them. One of the questions I'm not sure if anyone asked was if you have two LLCs that you just have sitting stagnant, like it's not doing anything, you haven't done anything with them, are they still valuable?
As long as they're active, congratulations. You got an age corporation.
Yep, they're still active.
Yep, there you go.
Just haven't done anything.
You got an age corporation. That's perfect. I mean, it's just the way it's sometimes that's the scenario, but as long as they're active businesses and you do have an age corporation. So yeah, you can leverage those.
Okay.
It's one of the largest undervalued assets that people have that they don't realize that they could leverage.
Yes. Okay. There's another question, but I'll probably schedule my time and ask you other question. Oh, I know what I was going to ask you. I know that you prefer a desktop, but if we have the paperwork, can you give us the paperwork we need to upload like a checklist so we can have it ready to do it on because I don't have a desktop at this time.
Okay. So phenomenal question. So whenever you book the appointment, it's already there for you. So that's why I was saying when you go through and you fill out that link and you book an appointment, you're going to get an email immediately. In that email is a video that I personally shot that will prepare you to meet with our team, but it has a whole checklist, and I walk you through step by step how to get all of those documents and info before you meet with someone on our team. So just check your email as soon as you book that appointment, watch the videos, it walks you through step by step.
Okay, perfect. Thank you so much.
Of course, you're very welcome. There is one more question, and I do have enough time for one more question. It is Miss Dina Brown Williams. Go ahead.
Hi, Brian. Good to see you again.
As always.
Okay. Yes, quick question. I did fill out the questionnaire, so I'm ready. But I have one quick question. I pulled the report, and everything was good. No derogatory remarks, no late payment, none of that. But I did notice that my name was written a couple of times in many different ways. Should I be worried about that, or that's nothing to really worry about?
It is something that will have to be addressed, but our team will be able to help you get that addressed, and that can be addressed in like a couple hours. That can be addressed like same day. So as long as that's the only issue, that's fine.
That was the only thing that I saw.
Yeah, perfect.
Yes.
Yeah, but yes.
Okay, and again, my interest, of course, is still in getting business credit cards. I've been trying to do that, and I went to the bank, and the person that I always work with, he asked me why I don't apply for a business credit card, and when he said that, I was shocked because I didn't know I was eligible for that. But he asked me, I didn't even bring it up. He brought it up because I have several products there. I should have took it, right? I should have did it, right?
I am always a big fan of leveraging other people's money, especially on the business side. And one of the key things here is like when someone when you're at the bank and they offer you that, it means in their system they saw some kind of pre-qualification. So that means there's some kind of offer, which is why, yeah, he was pushing for you to do that.
Okay, no worries. I'm just glad I got to that point, and it's because of the help I've been receiving. Thank you so very much. See you soon, because I did fill out my questionnaire.
Of course, you're very welcome. We will see you soon. I will scan the chat really quick. I've got just a couple minutes. Should I request a credit report from Dun & Bradstreet from an age corporation before applying? That was a question. I don't know if I'll get to all of them. That was one of the questions in the chat. You can get a credit report from the Dun & Bradstreet. It's a two-part process. So it will let some age corporations, they might not have a credit profile established with D&B. And if they don't, then obviously they won't show up in Dun & Bradstreet. Doesn't mean that it's a bad corporation. It just means they don't have credit established yet. Now, the D&B report is something that we do whenever we're vetting age corporations, because if they do have a D&B report, now we can tell if there's negative information being reported on behalf of the age corporation. If you're looking at an age corporation and you're doing it on your own, yes, we always suggest pulling the D&B report, because if they do have negative information, you do need to know that ahead of time. But just know, just because they don't have a D&B doesn't mean that it's a bad age corporation. Let's see here. Let's see. Someone said, again, this is not tax advice, but I see someone knows something about taxes. We do business funding. It's a business transaction. Therefore, talk to your financial advisor. But someone said in the chat that 10% fee is a tax deductible expense. A lot of our clients have used that before. Not saying that's applicable to your particular situation, but it is something to look at. Someone asked, do the 0% credit cards you mentioned generally have prepayment penalties? No. Credit cards don't have prepayment penalties. The only time that you really come into that is like business term loans, and you can negotiate those, but yeah, no, not for the business credit cards. And then I think that low risk industry codes. The low risk industry codes, you pretty much always, there's a couple industries you want to stay away from that are considered high risk. It could be real estate, is depending on the lender, could be considered high risk. Trucking can be considered high risk. Generally what we do is, again, it's not necessarily what you do, it's how you do it. So what we look at is, if you're a real estate company, if you're a trucking company, what, again, this may or may not be applicable to your business. So I'm not saying this is for your business. I'm just saying what we do with some clients and what we do sometimes. So there are two aspects that are generally applicable to every business: management or marketing. There's going to be some kind of management work or management consulting. There's going to be some kind of marketing work or marketing consulting. So a strategy that we use if we're working with high-risk businesses is, a lot of times we position that business as a marketing consultant or a management consultant to other companies or other businesses in that industry. I hope that makes sense. If you catch it, it's extremely valuable. With that being said, Christina, in 7 ways, I do appreciate you guys as always. I hope that this was extremely valuable. I do have to get ready to go, but I will look forward to seeing you guys again very soon.
Thank you, thank you, thank you so much, Mr. Brian Dorsey. We appreciate you every time that you grace us with this valuable information. So thank you so, so, so much for being such a valuable educator here in the program. And I know that the whole entire community really appreciates you. So
Absolutely.
you have a blessed rest of your day. Thank you.
Thank you. Bye.
Bye. All right, you guys. So how did y'all feel about Mr. Dorsey's masterclass and presentation overall?
Educated.
Right? It was
Yeah.
phenomenal.
Yay! Awesome, awesome, awesome. Yes. He's one of the best educators that we have. So I'm just excited every single time that he comes onto the workshop. Tomorrow we do have our other educator that you're going to meet. It is our CPA, and you're gonna walk away feeling the same way. So we do have a couple more minutes for Q&A. If you guys have any questions for me based off of the information that we went over today, I would love to answer your questions. So we got about 15 minutes here. I do have some questions in the Q&A bank. So let me go ahead and jump in there really quick. So let me see. So someone said they noticed a difference about the name that I use for the EIN application. So that was just an example. So when you're applying for your EIN, please use the name that you are intending on using for your business trust. They also asked if it's best practice to have a trustee seal. So absolutely, yeah, you can definitely have a corporate seal for yourself, and then you can also have one for the trust. So generally, you'll have your name and your position on there. Nicole has a question. Hey, Nicole.
Hey, how are you?
Hey, how are you today?
I'm good, thank you. I see you put on the dramatic makeup today.
Oh
Where you
yeah,
going?
I had a photo shoot this morning, okay? I've been up since 5 a.m. I had a photo shoot, I created content, I did all kind of stuff. So today's one of those days where I start at 6 a.m. and I end around 10 p.m.
I know that's right.
Yes,
Okay.
ma'am.
So I have 3 questions. So when you
Yeah.
do these classes, how soon are the videos available in the back office?
Yeah, they're available the same day. So
Okay.
like today, so day 4 will be available probably an hour after we're done with the workshop. So it just takes time to render, and once Zoom gives us the recording, we upload it into the portal.
Okay. My next question is when it comes to getting these bank accounts for the trust, can we get them done online, or is it better to go in person?
Yeah, you can get it done online. So it depends on the type of bank that it is. So for example, one of the banks, like two of the financial institutions that we love is Ally Bank and Fidelity Bank. And so their whole entire process is online.
Okay. And
Yeah.
my last question is, okay, say we have an LLC right now. but then we're making the trust become the owner of that LLC. Do we have to change any paperwork when it comes to the LLC bank account as far as the owner?
Yeah, you have to update the bank to let them know that the owner has changed. And so on file, it should have the trust entity name.
Okay, and will we need to provide anything to the bank to do that? Any of the
Yeah,
documents?
yeah. So every single time that you need to provide proof of the trust, you're always going to provide the certificate of trust. So it's just like how you don't leave home without your driver's license or your ID card. If you're going to do a trust transaction, you don't leave without the certificate.
Okay, all right. That's all I have. Thank you.
You're welcome. All right. Next we have Stacy.
Hey, Christina. I actually put it in chat, but I wasn't sure, but I'll go ahead and just ask the question. So I did first off, thank you so much for this community. I join a lot when you have these calls. And I want to say I finally finished my trust where I feel like I feel like I got it right. And so I did send it over to Ivy a few weeks ago under like the trust review, I think title that she mentioned. I haven't heard anything yet, so no rush, but I just wanted to know, I just wanted to make sure it was still being looked at and see if I missed any communication maybe about it.
Okay, absolutely. So I will reach out to the team to see where in the queue because we have a lot of trust review requests. So I'll see
Okay,
what number you are and I'll have them reach out.
perfect. Thank you so much.
You're so welcome. Let me just give a quick disclaimer. We have over 2,200 trustees in the community. And so right now, the last time I checked, we had like 83 people that we had to review their documents. So
Okay.
thank you for your patience, Stacy. All right. Next we have Raquel. Hey, Raquel.
Hey, Christine.
Hi.
So I have more questions. Nice to
Yeah.
see you again. I love your
Nice to
makeup.
see you. Thank
Yeah,
you. Thank you. Thank you. Thank you. I appreciate it.
I love dramatic makeup too as well.
Thank you so much. I look
Um,
different. I look different.
So
Uh,
another couple questions there. So I saw that when you were applying for the EIN number, we have to put our social security number, right? So when it comes in the future, when it comes to like any problems, like if they sue the trust or the company, or if we go bankrupt, would that affect us? How would that affect me?
So when we are applying for an EIN for the trust, we're going to put the personal information of the responsible party. The responsible party is the grantor. So it's the grantor's full name and social security that's required. And then they're also going to ask for the trustee's name only. They don't ask for the trustee's social security. So it does not affect them in any way legally. So with the trust, right, whenever there's issues that happen with the trust, you don't run to the EIN, you run to the trust contract, right? And so the trust is liable for anything that happens.
Yeah.
And if it's dealing with the assets, then the trustee is liable for the assets. So
Okay. And
the trustee is responsible for everything.
even though the grantor put in their social?
Correct. So the grantor, because they are a party of the contract, the
Mhm.
IRS wants their social and not your social. So it's two people in the contract, right? It's you and the grantor. They're not asking for your social because you're the one that's going to operate the trust. They're asking for the grantor social.
But in the trust, the grantor doesn't have any um can't manage or control the trust, right?
Correct. Yeah. And that's because we have an irrevocable trust, but not every single trust is irrevocable.
Yeah. Okay, got it. Okay, I was just trying to understand. And then my other question was, let me go back to my notes here. On the list that you gave us for the banks to apply for, do they all, so they don't ask for the trust agreement, right? Agreement, right?
Yeah, so majority of them don't. Sometimes it depends on the banker. So I don't want to tell you yes and no. So for example, Ally Bank doesn't ask, Fidelity Bank doesn't ask, Truist Bank doesn't ask, US Bank, First Citizens, they don't ask. But I'm not sure what your experience is going to be because every single banker is different. And so sometimes you might have a banker that will ask you, and you have to put yourself in a position to decline and tell them, no, I'm not going to provide my trust agreement.
Okay. And then one last question.
Uh-huh.
On the Schedule B, you said we have to update the money amount that's been put in the account or borrowed. How often do we have to document that on Schedule B?
So the Schedule B is a living document, so you can update it whenever you add or remove assets.
Oh, I see. Okay,
Mm-hmm.
sounds. Thank
Yeah.
you.
So, I mean, your account balance is going to fluctuate every single day. Just like the same thing with people who put like their crypto wallet, your crypto holdings is going to fluctuate every single day. So you are going to update it however often you feel is appropriate as far as, the way that you decide to operate the trust as the trustee.
Okay, I see. All right,
Mm.
thank you.
You're welcome, Raquel. All right,
Mm.
next we have Ray.
Hi, yeah, I think yesterday I asked a question about websites and setting up, and I didn't ask the question correctly because I think I was confusing this gentleman in setting up your business the right way. I guess that is setting it up before it goes into the trust because the gentleman was talking about Mr. Dorsey was saying about getting your professional email and then purchasing a website, and I think that that's what I was asking about in the protection of the trust. And are we doing this all outside of the trust before we enter it into the business trust? For example, our LLC. We're doing all of this work before we enter it into the business trust. Is that your understanding?
So if you're
Oh,
talking about the LLC having like credibility, so you having like a domain for the LLC, a professional email that goes to the domain, those are all things that you're going to do. It doesn't matter if you do it before you put the LLC into the trust or after you put the LLC into the trust. So the LLC is its own entity. And if you want to get funding, you have to be fundable, which means that those things are highly advised.
Okay,
So
maybe I
I
was
thought,
confused with the ministry trust. Uh, I think I'm ready to do this, but I'm still not clear about how to protect these things if it's you now have a public website, you have this email address, you have this telephone number, and so it's still going to connect to you, and then it's going into the trust. So I guess I'll get it eventually, but that's still part of my confusion in keeping the two separate. It's very important for me to keep the things separate. And so I guess I just have some more studying to do.
yeah, so when you gave me your example, you're giving me the example with two entities. So if it's one entity, then what you can do is you have to establish the entity and then you have to get those things for the entity after it's established.
Okay. So get my LLC all done, um, website, domain, everything, get business funding, get all of this stuff. and then add it to my business trust?
Yeah, you can do it that way if you would like. You can do it that way. So some people, so you have to determine what your end goal is. If right now you want to get funding, then the way that Brian teaches it is for you to use your personal information, right? Which is you're going to leverage your personal credit, you're going to be a personal guarantor, and you're going to get the funding that you need for the LLC. After the LLC has the funding, then you transfer the LLC into the business trust, and then you're able to lend that money that you just received for the funding to the business trust.
Exactly. That's what I wanted to do, the process of doing that, because now the LLC is safely within the business trust. Or that I didn't know if it had to go in and I had to transfer it to the business trust, to
Yeah,
the to
so it's if you don't want to have to disclose the business trust information, go for the funding first.
got you. Okay. Thank
All
you.
right. You're welcome. All right, you guys, we have 5 more minutes for Q&A. So next we have Diana. Hey, Diana, how are you? Nice to see you.
Question. Could I be a grantor for somebody else's trust and they be the grantor for me? Or
Yeah,
is
that's
that,
fine. No, that's
yeah?
fine. These are separate entities. Yeah, absolutely.
And it wouldn't have an effect on me and it wouldn't have an effect on them, correct?
Right, correct. Yeah. So as long as you're not connecting them in a way that like your trust is serving as the beneficiary of their trust. So just keep them separate.
Okay. And then I was asking, the whole life, do you have any videos or anything on the whole life? I wanted to
Yeah,
try to.
it's inside of our portal. So it says infinite banking with life insurance.
Now, is there somebody specific that we use, like in your group, or do
Yeah,
we
yeah.
on the
His name is Depot Adesina.
because yeah, I put in to get called, but no, he never called me. So I wanted to speak to him.
Okay.
Um,
So I will have the team reach out and send your information.
okay, great.
All
Thanks.
right. You're welcome, Diana. All right. And next we have Angelica. I know you had a question in the chat. Are you going to ask that question? Angelica, are you available? You're on mute.
Yes, I'm sorry. I can. I'm probably gonna have some questions spill over for
Oh, okay.
tomorrow.
Okay, no problem. No, because I saw that you had a question in the chat. So I don't know if you want me to address that question or if you're asking it now.
Yeah, I can ask it now. What would you say the pros and cons are to doing interest-bearing loans as the trust, right? You demonstrated to us earlier how to do a promissory note. So I was wondering if there's any difference between interest-bearing loans between the trustee and the trust and or interest-free loans.
Yeah, so it's just whatever you prefer. You set the terms. So all of the terms, including charging interest, is what you decide. So this is a discretionary trust, and it's at your discretion what you want the terms of the loan to be.
Oh, okay. Okay. And then when you go shopping for the banks, are you shopping for all three trusts, or should we have bank accounts at different banks for each trust?
Yeah, so that's a great question. So it depends if you are concerned with commingling. So it's perfectly okay to be at the same financial institution and have three different accounts. But if you're concerned with commingling to where you're going to be using one account for another trust and moving money around like inappropriately, then I would tell you to have it at three separate banks. But it's absolutely not necessary to do that unless you have those types of concerns.
Wow. Perfect. Thank you so much. I'll
You're
save my
welcome.
question for tomorrow.
Okay, all right, awesome. All right, and then we have 2 minutes left. Nicole, you have a question? And then I think I have one more question in the chat. Let me look here. Nicole, do you have a question?
Oh yeah. With that Schedule B, if we have to put things in or take things out, do we have to put that in the minutes of a meeting? Do we have to have a meeting and mention that?
When you put what? I didn't hear the first
On the
part. I'm
Schedule
sorry.
B, when you add or remove the assets, do you have to bring that up in the minutes, or does it have to be documented that you did that?
That is a wonderful question. So if you sold a house that belongs to the trust, you're going to have a meeting about it. And then you're going to edit your Schedule B and you're going to remove the house from the list of assets.
Okay,
So
so like for me,
so acquiring, so like acquisition and liquidation, those are major things in the trust. You need to have a meeting about it.
you have the meeting about it. Okay, so like if I close a brokerage account or something like that and had to take the assets out, that would require. Okay, I got it.
Absolutely. Yeah,
I got it. Thanks.
absolutely. All right, you guys. So we are all done with day 4 of the Wealthy Trustee Workshop. We went over a lot today, mainly OPM, how to fund money, how to fund your trust, how to get your bank account. So remember that tomorrow we are going to be talking about asset protection. So you should be finalizing your asset inventory list, please, 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 because tomorrow is all about asset protection. We also, our educator is going to come in and teach about the 1041 and answer all of your questions dealing with the trust taxes, okay? So that's what we have planned for you tomorrow. So with that being said, also go ahead and book a call with Brian Dorsey and his team if you guys feel like you're at the point where, yes, I have the LLC, I can definitely go ahead and start establishing business credit, or maybe I need to repair my personal credit first and then go forward with the business credit and funding. So go ahead, even if you feel like you're not ready, go ahead and fill out that form so that his team can contact you to see where you are, right? You want to at least know, what your standpoint is at this time with your current, with your current structure. So with that being said, we're going to see you here tomorrow at 11 a.m. Eastern Standard Time. You are going to receive an email 1 hour before the workshop with all of the essentials that you need. So we will see you here tomorrow on Zoom. I love you guys so much. We do have a masterclass tonight. Okay, so if you are available and you want to learn about the foreign exchange market and how to actually make money in this market, we're having a master class tonight with one of our traders. So it's going to be at 8 p.m. Eastern Standard Time if you're available, okay? So I will see you here tomorrow on Zoom. You guys have a beautiful rest of your Thursday. And if you're coming to the master class, I'll see you tonight. Bye, everybody.
Thank you. Bye.
Thank
Thank you.
you.
You're so welcome. Yay. Thank you.